Hello guys and welcome back to another market review. We're gonna kick off by picking it up where we left from. If you recall last week's review, the last thing I covered was the dollar index. The reason for that was that it was sitting at this at this level, right? Which was this trend line that was supporting price. Now, I thought that it was a very key area because this week we were going to see whether the dollar wanted to break lower or if it wanted to hold above, you know. But it was very clear from the start of the week that the dollar wanted lower. So this keeps fueling our short dollar bias for the month, right? Because right now the high of the month for the dollar could be in, and we're looking for an extension lower, and this level right here really stands out to me. So for the next week, I could see the dollar going higher a bit, rejecting and just um, tanking a lot. But let's cover the majors, um, starting from the euro. I'm gonna show you the big picture, right? The euro has been in a range since June, and we were specifically within this range in a downtrend from mid-September, right? Now, the market didn't take out this zone, right? If you remember the previous reviews, we were saying how we were kind of surprised that the market stopped short from hitting this area here, which was very inefficient, right? Because FX and the euro has been very good at filling those inefficient moves. So when it doesn't do that, it it just tells me that it wants to go in the opposite direction, right? So also when the market was sitting below this key range level, which was a pivot, you have 3 daily closes below this level, and it bounced from this area here, right, and reclaimed this level. It fueled our bullish euro bias, right? Now we've broken this bearish trend line, so that is another reason to remain bullish on the euro, right? So I actually think that the euro is looking to trade into this level and this level. Maybe, maybe it's a bit ambitious for December, but I'm just thinking that this bias should remain uh, throughout December and January. This bullish bias. At least we're gonna see this level traded in this month. That's my view. So when we look at what happened last week, we had a rally early on Monday, right? And we didn't have a single close below the weekly open. That is important. That was the signal, the early signal that this market wanted to break higher. And it rejected from this level as we expected. So we played the long on this H1 close, which was around 8 a.m. and around the London Open, boom, you have this leg, and then it retraces all that. And when it pulls back, where does it bounce from? From the weekly open and this trend line, this bearish trend line. So this long, the second long opportunity was very clean as well. Now once the market broke above this mid-range, which I believe is a pivot, look at how clean that is. That gives us confidence that this level is important. When we see price respect it and react from it, right? And treat it like a SAR. So if you look at the extension of this weekly candle, I was a bit disappointed because it was only 90 pips, and the average lately has been 110 or maybe a bit more. So, the fact that price distributed in this area wasn't able to make a push higher um, made me a bit wary that maybe the longs were not that safe anymore. And this week we have FOMC on Wednesday, so this level bounced, the euro bounced from this level very, very cleanly into Asia, but only to retrace the whole move and make it this low, right? Which broke the structure, in my opinion. So I think the bias for next week is bearish on the first half and bullish on the second half. One thing that is in the back of my mind is that the monthly lows are really, really small. This is an anomaly. And I just kept thinking that maybe the euro wants to make a bit deeper low, right? Um, what I do think is that we're going to have a weekly open around this mid level, which is a very, very good thing because this is already a pivot for us. So I believe that, next week, because we saw weakness in the last part of the week and we saw a smaller than expected extension to the upside, um, you can use the weekly open as resistance and probably look to trade price close to the monthly open, right? So I believe that we're going to see price maybe rally a bit, get below, and maybe from here you find your short with your stop loss around here, and then you can trade price lower. Now that's the short term, and as I mentioned, first half of the week. For the remainder of the week, and once we have FOMC out of the way, um, this is a great level to buy, in my opinion, because the market has shown us very, very bullish reaction from there. So if price spiked below the monthly open during FOMC or any volatile event, I'm fading this in anticipation that this is just the low of the month and we're gonna rally, right, and recover this and look at this level as the next extension. So this would be my preferred scenario. FOMC tends to create significant lows or significant highs before the real move uh, takes place. And the most recent that I can think of was this one, right? So you have prices. This is on Monday, right? On a week where we had the FOMC meeting, and you have price rally the first part of the week, then cool off a bit. Come FOMC, you have this big spike and massive sell-off, and this was the beginning of this whole downtrend. So what I believe can happen is quite the opposite, where we sell off early in the week, we start to cool off from the monthly open. Come FOMC, we get a dip into the trend line as well, below the monthly open, reclaim that, and we're good to go. This is what I think is going to happen. However, if you don't want to trade around this area, which I understand, you can always wait until FOMC is out of the way and wait for price to reclaim this level and get long. Now it's a great opportunity, and remember that we still have a gap open around this area. So let's see what happens. On GBP, actually the euro has been one of the worst performers for the last 2 weeks against the USD, but to me it's been the cleanest of all of them. But GBP has shown a lot of strength, and if you look up what price has done, it it made this low and it just rallied from it. And if you see where price stalled at, it is at this key level which lines up with the origin of a huge sell-off, this whole leg. But on the great scheme of things, GBP has also been in a range and in a downtrend, and it clearly has broken out of that trend line. So what does that mean? Well, that means that the long-term trend now is bullish, and pullbacks are a gift to get long. Now, the reaction from this level is very, very clean, and I think that, same as what I think about the euro, is that GBP is going to pull back early in the week and it will find a bottom. If it manages to pull back into this area, I think it's a fucking great long, because it is the origin of this whole move, and a sharp move into here would be bought. I have no doubts about that. However, just like I mentioned with the euro, another the safer option would be to just wait for this level to be reclaimed and they get long. Put your stop loss wherever we see another significant low be formed before we break out above this level. Now, I wanted to cover New Zealand USD because, again, they are all lining up pretty well. We had this rejection from the yearly open and significant bounce. Then during Wednesday, I identified this level. When you look at a daily, you see the market can't close above this level on a daily time frame for 4 days in a row against this trend line, when you know that the positioning on the New Zealand dollar is short, skewed to the short side. So you just looking to get long as soon as it breaks out, because the whole context is supporting that idea. It doesn't make any sense to get short New Zealand USD at this level. So what I think is going to happen next week is that, well, we have this flat daily open, and I would actually be okay if the market retraced into this level. I think is a blind buying opportunity. It doesn't mean that the trend is going to turn bearish, as long as you don't have a daily close below this level. It's the inverse uh, reasoning uh, than the one we use to get long, right? Because when it couldn't break above this level on the daily time frame, once it did, you flip long, and once it is able to close below this level, then you know you have to switch your bias and turn bearish because it's very likely that it's gonna go lower then, right? So a pullback into this level is a buying opportunity. I don't know if we're gonna get there. I actually think it's just gonna keep range bound and just keep going, keep grinding higher. This is a tricky pair to trade, but the bias remains bullish, and if it pulls back, I hope we get some volatility next week, man. We can really snipe those entries around the weekly, monthly opens and significant SR levels across the majors. Now I wanted to cover gold because on this pair I took a loss last week, and I was bullish because if we look at the daily time frame, I thought, well, we have this strong, really strong breakout on Friday, right? So I think we're gonna continue higher. That didn't take place, and the way I traded this was just leave a limit below the monthly and weekly open, which I did, and I got filled around this area, which was pretty much the low of the day, and I was just waiting for an extension higher, but then prices took me out on this candle, and it pretty much stuck around the weekly and monthly open and rejected from it. So I don't think that gold is going to push higher from here. I think it needs to find new buyers at lower prices. So my trigger for longs, I mean, you could get short because we're gonna have a weekly open, right? So you can just wait for something like this and then short. I think this is a good trade actually, but you could also try to long from here because I think around this area is gonna hold, and you could also see this as a range, right? And just wait for price to bounce from here, reclaim, and then get long again into these highs, and then around here. No, something like that. It would respect this trend line that's been going on for the very best part of October. And yeah, let's end up with Euro New Zealand and EURAUD. I spoke about how I thought that the low of the month and the year, the high, was in for Euro New Zealand after this swing failure pattern at key highs. Now, because price had already sold off massively on the last 2 weeks, I was expecting chop at the first part of the week, and I thought that the short from this area was a good idea, and it happened perfectly. If you remember the the last week's live recording, I drew something like this. Boom. Exactly what happened. The move wasn't great, but I think this is something to expect after you have this massive move. Um, However, I think that the trend continues. I think that this is the next target, and there's no reason to look for longs until we trade into this area. And from here, you could just see a bounce, but I'm really looking at this area here, and it's really interesting to me because I think, this really inefficient move right here just reminds me of this one. And you see what happened, right? We filled it. So I think here is a very conservative target. I'm pretty sure we're gonna get there, but I wouldn't go all in on the longs until we at least come into this area. And how I'm looking to play this on the next week? Well, now that we are below the monthly and weekly open, we can think that the high of the month is thin, right? Actually, when you look at the monthly, this looks horrible. I think this is gonna. It looks like it wants to just go lower. So I think that if you get another run of the monthly open, you just sell that. So that's the way I want to trade this. Let me draw it. I want to see something like this. You get short here on the premise that the high of the month is in. So that would be all my plans for Euro New Zealand. And now let's jump onto EURUSD because the bias was short as well, right? These two tend to go together, and I was very vocal that these lows around here were not going to hold, and we needed a bigger dip before we found another bounce. And I'm quite surprised at how price arrived at this area. So first of all, why have I drawn a green box around this area? Well, let me take you back. Let me take you back. When you look at the way that Euro AUD moves, it tends to stay in a range, and once it goes into the extreme of a range, you pay attention, right? Normally, you're gonna see how it respects, gives very significant reactions once it reaches the origin of a move. So in this instance, you look at this like the origin of this whole leg to the upside. And once price comes into here, boom, it gives you this bounce. So this is what I'm trying to capture with that green box I've drawn. And I can show you more instances like this one, right? You have this whole leg up, and this was untapped until we had this small dip, and boom, there she goes. So when you look at this, it's pretty much the same, isn't it? So actually, you also have to think. Sometimes it's not about where is a great place to get long, but also what is a terrible place to get short. And right here, I think is a terrible place to get short. So I know that the Central Bank of Australia has changed his stance around inflation, and yields have been spiking. That's caused the AUD to be really strong, and I believe that strength is going to continue for the next months. However, if we didn't know any of that, we would take this trade. So this is what I'm gonna do. I'm positioned long around here with some limits, and my stop loss is below this low. So I'm not looking for a massive trade. I just think that based on how the AUD tends to behave when it trades into these significant areas because this zone here, this range, led into this impulse, boom, and this one. So I don't think this lows should break before we see a bounce. And I'm just looking for something like this, maybe a retest of the monthly open. And then, yeah, you can break and we go lower and we trade into this area, which I think is a great long. The best long that you could look for on EURUSD, maybe. But for now, I think this is a great play. Also, the move here, the move down has been really one-sided. There have been no bias, no bias. So if we're to reverse, it would be very fast. So let's see how it goes. We have, I think, the RBA meeting on Tuesday. So I want to see a reaction on Monday. Uh, if on Monday I don't see any bias stepping in, I will get out. But I just think that the RBA is gonna keep the current rates or and be very hawkish about the stance on inflation. And let's see how it all behaves, how it all happens. I'm gonna reduce risk because I think this is a very risky play, but at the same time, man, everybody's long AUD, and this move has been fast, very fast and one-sided. So maybe we get this, but we shall see. We shall see. So we'll see next week how it all unfolds. But yeah, that was all from me, and see you guys next week.